But coming back to the portfolio, I am of the view that we should do a wealth allocation. So you take into account how much gold they have, how much they have in FDs, how much they have in their house. And then, therefore, what is left over is your financial assets, which could technically be 100% equities because you have all these other assets anyway. That's the way I see wealth allocation. But that's not how most wealth tech and the financial advice industry works. Somehow they say, what you give me is somehow the portfolio, and I will optimize that with MPT, modern portfolio theory, which is a Nobel Prize winning, all that sort of stuff, which, by the way, it's not modern anymore. It's some 100 years old. But my point, though, is you're optimizing something which is only a small part of their overall wealth anyway. So what's the point? Smriti, coming to you, how do you deal with this? Do you take into account their other assets and then give them asset allocation advice? Or do you optimize just their portfolio?
No, definitely. It has to be much more comprehensive than that. The portfolio, and as you mentioned, it could just be a small chunk of whatever wealth they have. It has to include not just all their assets, wealth, in fact, also liabilities. What kind of risk tolerance do they have? And generally, for women, we have seen that on the platform, the risk tolerance is much lower compared to men. I'm not sure whether that is really true or it's just perpetuated in their mind that they're not risk takers, they should not be taking risks. But as you mentioned earlier, women also have that biological difference against men, that we tend to live longer than men. So at least from what I've seen on the app and from my experience while interacting with women, one, they do not think so much in long term, and hence not end up allocating as much investments into equity as they should, right since the beginning. They tend to scare very easily, actually. Recently, with the market, when the markets went down, we could see so many women actually freaking out. They were afraid what to do with money. They were just. I think earlier you had asked that, do they have some lack of trust with the formal financial institutions? I do think there is some lack of trust. At least in women, it's a little bit more compared to men, and hence they tend to scare very easily when it comes when there are market dips, when there are any corrections and fluctuations in the market. So that second, I think women need to understand that they have to play for the long term. They're going to hopefully they're going to possibly live longer than men, and hence their equity allocations have to be at par, and they have to be invested for the longer run. And the third part was that the debt investments, women actually tend to they I'm not saying that they don't invest or they do not save for emergencies. Men, in fact, actually have seen that they don't save as much as emergency funds. Women do, but they then tend to stash all the money into just bank accounts. For, I think, slightly older women, now it would be more of, as we were discussing, gold investments. But I've seen that at least for younger generation, for younger millennials and Gen Z, it's mostly bank accounts. So I don't think that people understand the importance of debt investments, liquid funds also. That's something that we have not really, I think women are not really aware about so easily. They just tend to rely on bank accounts or maybe sometimes even FDs for their short-term investments and savings. We, on the other hand, coming back to the question, I think it's not just their portfolio with us that we take into account and optimize it further. It has to be much more than that. It has to be what kind of liabilities they already hold, what kind of risk tolerance they have, what kind of tolerance they have when it comes to market fluctuations, how much loss are they ready to bear, what kind of assets do they want exposure to, and they're ready to take that exposure. I think all of these things have to be taken into account. With women specifically, I think risk tolerance becomes a much more important factor, because women tend to lack trust when it comes to portfolio managers, advisors, etc. They trust men in their family, their father, their partners more. And hence, I think it's even more important that it's much more comprehensive when it comes to portfolio management and optimization for them over the time.
Mm. You mentioned risk tolerance a few times. I mean, risk profile includes the ability to take risk, the need to take risk, and the risk tolerance. I personally don't believe there is such a thing, that you have your ingrained like an IQ type thing. But and I can prove it by sending the same person and answering the same way to multiple different financial advisors, and you will get different results. okay, because there is no scientific way, there is no standardized way around the world. Okay, so I would say don't put too much credence on this risk tolerance questionnaire. Would you agree, Marin? Is there something that you have found that women are less, or are they more risk averse or less risk tolerant? What have you found?
I mean, generally, yes, women are less risk tolerant, but I don't subscribe to the risk profiling tools that are available as well because, and my thing of telling people to figure out what their risk is very simple. If you've got 100 rupees today, how much of it is it that you're willing to put in an investment that could be volatile versus how much you're willing to put in an investment that's not going to be volatile? And I think that's your risk profile. So I don't really subscribe to risk profiling tools as well.
Right. Okay. So now coming to, we say we have managed to get women into the room and we are having a discussion with them. I don't think you can give them all the financial gyan in one meeting. Okay. So I think it is important to take baby steps. My personal approach to taking those baby steps is to say, one, the way I explain asset allocation is through a house, like have your foundation, have some pillars, have a fun roof, the way you do. But then also, more importantly, start with index funds or ETFs. ETFs, if you can open a demat account, or index funds just to get started. Not because I don't believe in active or passive debate. We can have a whole other debate on that, but more because you don't have to put your mind towards then selecting funds also. That's just my approach, but I would love to hear from all of you. Smriti, what do you do? Do you recommend index funds or do you recommend active mutual funds?
Definitely. No, I think I'm a big ambassador for passive investing, especially for beginners. And I believe that it would be the case with most of the women. Passive investing into index funds, ETFs is the way to go, should be the first step, because then you won't have to take care of basically understanding how to shortlist the kind of investments and exposure you want to have. Second, you won't have to manage it over the time. You won't have to actively basically track your portfolio and manage it along the way. And third, of course, the expense ratios are much lower. So if you're investing for the long run, which you should, it will be beneficial for you. So definitely, I also recommend the same.
The only issue with this, as many people have found, is that the business model of the provider, in which case you, a wealth tech firm, because you're not getting paid commissions in index funds or ETFs, many people are sort of inclined to recommend active funds just because that's how their business runs. So how are you able to sort of manage that, doing the right thing versus obviously running your own business?
I don't think, anyway, even charging commissions gets you so much money because, at least right now, everybody, the portfolios that people have I think it's spread out. For Indians, it's spread out. Then it's not just one platform they use. They use tens of different platforms, and hence you would not end up getting as much, I would say, commission out of the AUM anyway. For us, I think we mostly rely on the premium features that we have. So anybody who trusts the platform or who wants to have better, portfolio management or better asset classes or different asset classes, exclusive investment options, we actually rely on those, not as much on commission. And that's why we're not afraid to actually recommend ETFs. We have, in fact, a lot of ETFs already in the platform, in the portfolios, recommending to people, because that's what is good for them. In the end, we have to build trust. In the end, we have to do good for the users, and we know that we cannot shy away from these passive investment instruments just for the sake of getting a little bit more money out of active investment options.
Bryn, your view?
Well, I think it's important to do a combination of active and passive, because what I have seen is that of course, passives are less expensive and all of that, and they have huge advantages. But one thing that I see most investors missing out on is diversification, because when I talk to investors, and I get a lot of queries on my TV shows as well, you find that most investors have, let's say, chosen three Nifty 50 funds, right? And again, within people are really not looking at the mid cap indices, or even if they are, there are a couple of mid cap indices, there are a couple of smart beta funds. People are really not aware about which ones to really go in for, right? So I do actually believe that a combination of active and passive funds is a good option. But of course, yes, choosing active funds is not necessarily very easy to do for individuals. and which is why you would need an advisor, or you would need to look at some neutral information resources like FinSafe. We do provide research-backed quantitative recommendations on mutual funds. And clearly, we don't manage anybody's money, so we have nothing to get out of all of this. But in the absence of that, of course, stick with passive funds. But even within passive funds, do try and diversify.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.